6 sectors to watch closely in 2023. Anyone that owns stocks and bonds knows the pain of 2022. Good riddance. If you were a passive investor, no doubt your financial advisor or bank teller told you that it was among the worst ever years for the 60-40 portfolio. Few sectors left the year unscathed, but several sectors are catching my attention for 2023 and beyond. And today I'm going to share what sectors I'm keeping an eye on and why. Carbon. The carbon markets and investors enjoyed their first taste of what returns will be like in a real bull market in late 2021 and early 2022 as voluntary and compliant markets reached record high after record high, only to come back to earth. That's the chart you're looking at right now. The compliant markets fared better, with the European Union allowance permit rocketing up 2021 and closing 22 with pretty much a dud, though performing better than its voluntary market cousin. It feels like a distant memory, but at the time, investors were caught up in the meme stocks, the SPAC frenzy, cryptos, and trading gorilla and rock JPEGs. No one paid attention to the official start of carbonomics. Yet, dozens of major US and Canadian banks and investment brokerages issued major analyst reports for the very first time on the sector throughout the year. Major UK banks like Barclays and HSBC pledged over $2 trillion for investment in renewables and decarbonization. JP Morgan Chase, $2.5 trillion. Citigroup, $1 trillion, just pledged the same at the end of December 2022. This is the opposite of a crowded trade. Unlike crypto and tech stocks in 2022, no one was paying attention, meaning the biggest gains are yet to come. With the calendar changing in 2023, most net zero 2030 year commitments will accelerate faster than most realize. Now, this is why I like the sector. More and more investors are coming into the sector every day. This includes major pension funds, sovereign wealth funds, and other big money funds. But few outside of Katusa research are talking about it yet. But there are some major outlets that are starting to plant the seeds. Carbon is not going away. It's going to grow exponentially, and higher prices will be needed. Did I mention that the voluntary carbon market is growing at an obscene rate and finished the record transactions and dollar volumes in 2022? Yes, every year it's getting bigger. The trend is your friend. There's only one way to go over the coming years, and that's up. Now, how I'm playing it. The first half of 2023 will see continued pain in the carbon markets. However, companies in the carbon sector that were private and raised funds between 2020 and 2022 will need to show their investors the return on investment. For those who have done the right moves, more capital will follow them as they attract more capital to deploy into 2023 and 2024. For the rest, they'll be on their way to money heaven. I'm a major investor in many projects, and I'll have more on my strategy in the exciting carbon sector in the coming months. Time will tell if I'm right, but I'm betting a significant amount of my net worth into the sector. Hard dollars, not bullshit phantom shares and options like some management teams who confuse your money as their skin in the game. Cybersecurity. Warren Buffett called it the #1 problem with mankind. In 2021, cybercrime accounted for over $6 trillion in damages. And according to cybersecurity experts at Cisco, the number is expected to grow to 10 trillion by 2025. 1 out of every 10 firms experience a cyber attack each year, and a ransomware attack occurs every 14 seconds. This has companies all over the planet spending major money on cybersecurity and threat prevention, and there's big money in it. Why I like the sector. According to a study performed by Deloitte in 2020, the average company spends roughly 10% of their annual IT budget on cybersecurity. Microsoft alone spends about $1 billion a year on cybersecurity. Cybersecurity is a massive industry with revenues slated to accelerate growth year over year. Look at this data in the chart you're looking at right now. That's not projections. That's what is happening. Now, how I'm playing it. It's not commodities, but this sector has my attention because it's growing rapidly and the company valuations and the buyouts are incredible, even in a depressed market. For example, in Q3 of 2022, there were 62 deals funded and acquisitions for a total value of just under $9 billion. That's the quarter where the markets made major lows, and yet M&A was unfazed as private equity firms were scooping up cybersecurity firms for 12 to 16 times earnings. Sectors like that always have my attention. Katusa Research will release a special situations report on cybersecurity very soon. This is something you'll want to pay attention to. Third sector, gold, and in a small way, it's little brother silver. Central banks purchased a lot of gold last year. It was the most active buying by central banks since 1967. Look at the big player chart. Q1 black, pink, Q2, Q3 blue, gold, and Q4. Big banks like Goldman Sachs are coming out with bullish forecasts on commodities, including gold. Stories are coming out of places like Austria and Canada where dealers can't keep up with physical demand. Remember, anyone selling gold will always tell you that they can't keep up with the demand. That's part of a selling technique. But the point is, if you're new here, there is a big disconnect between the paper price and the physical price of gold and silver, often as high as 40% markups by the dealers. So be careful. In recent news, the US government is enacting law banning the purchase and transactions involving Russian gold. The gold wars could be coming soon. Now, why I like this sector? There is no rush quite like a gold rush, and a silver one too. It's a sector that offers explosive upside, but is fraught with gut-wrenching downside. Trust me, I've been on both sides of the equation. I've been to countless projects around the world, know all the major players and deposits. The commodity supercycle will come, and it feels like we're getting very close. How I'm playing it, I have literally zero interest in pie-in-the-sky junior companies or the typical rounders that peddle the same crappy projects with different names and negative swap line nations. I want big, needle-moving projects run by great management teams that make sense even at depressed gold prices. And I want my companies on major league US exchanges. There are a handful of favorites I like in the gold sector and a select few of juniors, which I have a large amount of capital and I'm holding on to for much, much higher prices. Could I be wrong? Of course. But one doesn't get to live the dream by staying home. Fortune favors the informed and the bold. Paid subscribers to the KRO, which stands for Katusa's Resource Opportunities, know the exact two golden elephants I'm writing millions on and why. Now, next week, I'll cover 3 more sectors I'm watching. We're getting longer than we originally planned with this edition. You can tell by the words and the facts committed in this missive that this sector has me excited for several reasons, and these aren't just words. My excitement is met with significant bets in the sectors in the 6, 7, and 8 figures, not some $5,000 swing trade. With that, next week I'll release part 2 of what to watch in 2023 series. Stay tuned and stay safe. Subscribe to the KRO, which is a Katusa Resource Opportunities, to find out exactly what prices I'm buying at and what price I sell at before the trade occurs. And you get to sell before I do. If you want to give your portfolio an edge, consider becoming a member and giving it a try for yourself.